The biotech sector down nearly 5% this year. However, my next guest says there are still many reasons to be optimistic. Here to share where she is finding opportunity, Michelle Ross, StemPoint Capital CIO and Managing Partner. Welcome.
Very nice to be here today.
It's great to have you on our show. What about the space? Why has the space not done well this year, and why is it going to turn?
Absolutely. So one of the things that has happened over the course of the year is that biotech, as a long duration asset, something that typically requires more capital to be sustained, has become a proxy to an inverse proxy to the rates market and what's been going on. And as rates have been going up, we have seen these assets, in particular biotech, really take the opposite trade here and be.
Okay, so as rates continue to come down, which you must think they are,
absolutely,
then that will be good for these much longer duration assets than, say, not the way we talk about mega cap stocks, but stocks like these.
Exactly. And we've started to see that through November. So as you have seen somewhat of a move down in the rates market, biotech has been lifting. And I don't want to make it seem as though that is the only thing that is driving this sector at this point. We have really seen a fair amount of really solid fundamentals and different themes that have developed below the surface that are in part also being attributed to the success we're seeing over the last couple of weeks.
Well, I mean, probably the biggest theme that's not under the surface anymore is this weight loss phenomenon, the GLP-1 effect, as you call it. How are you investing into that?
Yeah, so we have actually been following this theme and investing in this theme for years now. This is an incredible opportunity that was developed in part through a diabetes drug. Lilly and Novo took a diabetes franchise, developed it into what could have been only an aesthetic market in the obesity market as it stood, and then ultimately with the outcomes data that they provided, have been able to transform that into what could be a transformational outcome in the industry to obviously prevent death and cardiovascular outcomes, and ultimately long-term savings to the healthcare system as well.
So today was J&J's Enterprise Day, right? And you have stocks that you've focused on around that.
Yes.
That you are invested in?
Yes.
Names like Protagonist?
Yes.
A lot of these names we don't talk about very often, but PTGX.
Yes. Why? So one of the things I do want to say about a company like J&J today is when we look at their innovative medicines that they've really showcased, they have transformed themselves. They are, in effect, a biotech company. And when you look at the large cap companies and you see what they're doing, they're not only developing well, they're partnering well. And Protagonist is one of those partners. And what they've been able to do with Protagonist is develop a next generation in the autoimmune indication world, J&J 2113. We just heard today from J&J that this has the potential to be over $5 billion in peak sales. They had previously said about $1 billion in peak sales. So just the augmentation of that guidance is something that we were looking to and very excited about.